Hello traders, Gary Wagner here. Just before 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the 6th day of October, 2014, and this is the daily report for gold and silver. After hitting an intraday low of 1187, according to Kitco, my numbers show me 1184, but close to that 1180 number, we saw gold pop up and pop up substantially, currently trading up about $16 on the day. 1207.20 is the current print. That's just off of a high of 1208.60 and a low of 1187 even. Silver also trading substantially higher, up almost 3% on the day, 49 cents higher, back over 17 at 1732. It has had a low of 1667, a high of 1737. More on silver in a little bit. So traders, as I watched the market open overseas, Monday overseas, of course, is Sunday here in Hawaii, it did actually open and started trading lower, hitting a low, as I said, of approximately 1184. But it does seem as though there was a lot of support that came in. Now realize, and we'll show you on a different chart, but that in essence gives us that triple bottom. And I truly believe that if at any point we are going to see some sort of a bounce in the market, this would be that point. We actually did. This is a daily chart. You can see how it popped off of that right now. The candlestick pattern that we have is a piercing line. Of course, we went short at 1221. We trailed our stops to just above 1205. I've marked this out at 1206. We took a $15 profit, or $1,500 per contract in gold. And I also sent out an aggressive buy signal. And the reason that I say aggressive is we don't really have confirmation that we've got any kind of a potential bottom in place in a rally just yet. Not on the first day. This could be all due to short covering. However, it is my sense that because this is such a strategically important area, this 1180, and again, we'll look at another chart to kind of hone that in, but my sense is we'll see some sort of a bounce here, even if the market is going to trend lower. Now, unless the market can track above really 1240, and that's this last low here, we have absolutely zero technical confirmation that we've entered any kind of a bullish trend, rather a counter trend to the current bearish trend that exists in gold. That being said, what I would look for is any kind of a real bounce to take us up anywhere between, call it 38%, which is 1246, would take us just above there. The highest I could see this market going is about 1265. And I do believe that unless we have some primary changes within the market, we did see it in the dollar today, dramatically lower prices on the dollar, we're probably going to see the short-term bounce and then return to test this area once again, 1180, and then possibly even break below that. Of course, anything can change in a moment's notice because it's fundamentally based, and this real sell-off in gold of recent has been really due to the dollar strength. So to give you an idea of what I'm talking about, what we're looking at with the dollar, I've gone ahead and pulled up this daily chart. Dollar index, the market has just been a runaway freight train. The move that we saw on Friday was ridiculous in terms of the range that it covered, but it's given back almost, 80% of that range today, moving back below 86, currently trading at 85.87, but this is absolutely what is called a dark cloud cover. Dark cloud cover would need confirmation. Confirmation would, of course, indicate a potential lower price in the dollar. That lower price in the dollar, I believe, certainly can translate to the bounce or higher pricing in gold. So traders, this is what I'm talking about in terms of where we stand within the market. This is a 2-day chart. And as I've talked about, it seemed very, very plausible to me that we would go and retest this area here. This area, of course, being 1180 to 1184, 1184 being the low. We've now hit it 1, 2, 3 times. Now, here's what I'm looking at, and this is why I find the recent setup in the market pretty interesting. When we look at this dramatic rise here, what I've done is put in a fib extension for this wave 1, and then I begin that right here at 1032. Now, interestingly enough, 100% move of that takes you just above this support level here. 161% level really takes you to the record top. So we had a defined move up. And when we look at this in terms of a absolute retracement, in which it still could be in a bullish phase, believe it or not, based on this move from 2008 all the way up, and a 61% retracement takes you to 1167. And that's why this particular area, as far as I'm concerned, is so critically important right here, because holding above this gives us a couple of bullish models to work with. Any kind of move below this area puts us in the territory where the only models we can realistically look at are bearish models. And therefore, my sense is that we'll have to see. It's much too early, currently trading 1206, 1207. The key is, can it hold above 1200? That is what I'm currently looking at in terms of a basic support level in gold. And so traders, lastly in gold, another way to look at it, this of course is a weekly chart. On this weekly chart, we've got our start point a little bit different. Here it's starting from around 400 rather than 700, and it gives us that harmonics, because the 61% retracement level, when we start it from this particular bottom to the top, is the same as the 50% retracement level if we start it from, call it about $400. We can quite clearly see now at this point that we have this triple bottom. But traders, there's a real caution in the wind, because as you know, I'm seeing very, very similar price action, not in terms of the price point, but the way we're hitting bottoms, the way we're trading in this defined couple $100 range between what we saw back in 2011, 2012, and what we're witnessing now. If in fact this trend continues, where we saw the market move up, trade sideways, we get this break, goes, and now we've got these descending tops, flat bottom again, descending tops, flat bottom again. Of course, we had the false breakout right here. But if we're getting that, there's a real opportunity that this market could break below this critical area. And if it does, we've marked a couple of places where we think it could go. But it's a little early to tell right now. What I really want to focus on is whether or not we're going to see a bounce in the market. So silver, it's absolutely the candle that burns twice as bright, but also moves down twice as quick. It's much more volatile than gold. You can see this dramatic move as it hits a slow piercing line in terms of a candlestick pattern. Of course, to take that piercing line, we would want confirmation on the following day, a green candle with a higher high and a higher low. That would actually cause me to consider entering the market on a bounce in silver from the long side. Again, support right now, we're going to have to look at around 17 to see how it reacts, if it can hold above that. And I do believe it will trade in tandem with gold. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another daily update and review.